One of the biggest trading lessons I ever learned, if not the biggest trading lesson I ever had, was to understand that my individual stock trades don't operate in a vacuum. They're really mostly moving in line with what the big major indexes are doing, like the S&P and the Dow and the Nasdaq. Understanding what those guys are doing gives you a clue as to why your individual trades are acting the way they are. Your individual stock trades are like ships on the ocean of the major market indexes, so you need to know the tide and current of the market to successfully navigate your way to trading profits. Are we in a bull market or a bear market? What will happen to your trades this week? Don't get caught out and don't miss out. To understand the charts you're about to see, get your free video course and manual, plus many other free bonuses at stockgossipfilter.com. Now let's begin the show. So we're looking at the S&P 500 as usual after the market closed on 18th of August 2023. Each of these up and down pegs is a week of action. That's smoothed out for us by these coloured lines here, which are the moving averages of that price action. The most important one being the blue line. The most important one is the blue line, which is a 40-week moving average. So we're still in the same position as before. This is a Fox market. It's a Fox market. It's transitioning. However, I believe we are about 1 month away before I say goodbye to the Fox and hopefully welcome a new bull, as long as things sort of stay where they are. Now, as I've been saying for a while now, the market got wildly overbought. It needed to correct, and that's what's looking like starting to happen now, and that is only a healthy thing. So as long as that price stays above about 4,000-ish, then we should be on track to welcome in a new bull in about a month's time. But we're not there yet, so it's still the big picture is still very much a Fox, which means it's transitioning. And that sort of thing keeps us safe from these whipsaws like you see right here. I'm calling this the full start. It's like a full start to the next bull. Anyway, let's look at the day-to-day chart here. So there is the day-to-day action of the S&P 500. I said last weekend that there was a shelf had formed here, and I went with a neutral position for the short-term week ahead because I didn't know which way this thing was going to go. But I did say if it went lower, then we would get lower prices, and that's exactly what happened, and that explains the action this week. However, it's caught a bit of a support here. It looks like around there. So this week ahead, now we're still very much in a downtrend for this day-to-day chart, but I'm going with a little bit more neutralish, slightly bullish just for this week ahead. But there's still some correcting to do. Make no mistake about that. And it's interesting. I read there's been a lot of articles about major hedge funds and Paul and ICANN and all these people who are caught out by this bull run by shorting the market, and this is why I'm saying, you need to know what kind of market you're in. This is a Fox market by my definition. That means you don't go short, you don't go long, you don't go anything. But so you're talking about big names here, big hedge funds, famous names that are just doing all the wrong things because they're not looking at that big picture. So all stocks are getting caught in this downdraft. Week ahead, like I say, slightly neutral to maybe a bit bullish because it catches a bounce. We've got a lunar cycle coming up that's in our favor. This is a chart, interestingly enough, of the inverse. This is the inverse of the S&P 500. So it's doing the opposite of what the S&P does. And you can see just an interesting perspective there when you can see that, there is a bounce in play. Let's check in with the industrials. There's the Dow Jones. So you can see these are all still healthy pictures, but the S&P and particularly the Nasdaq, as you can see here, just got too carried away with itself, went up too much, too quick, and now we're starting to see more of a healthy picture as it comes down to correct. Needs to be closer to its rising moving average like that. And if it can just sort of stabilize around in this area here, like I've been saying, we'll have a really healthy picture and a brand new bull in about a month's time. So that's all for this week. I will speak to you next time. I appreciate you giving this video a like, and don't forget to subscribe or you could miss an important market call. Next up, a free webinar, how to read stock charts and trade stocks so you'll know what I'm looking at each week and why, as well as be able to trade your own stocks. I'll speak to you next week.